Hello and welcome. This is Kathleen Lobito, and I will be your host for today's webinar entitled Understanding the VA Funding Fee. Joining me today is Dale Poe, Mortgage Loan Officer at AAFMAA Mortgage Services, and he will be sharing just about 30 minutes of slides for each day. At the end of the presentation, Dale will answer a few questions you may have. Please ask your questions by typing them into the questions block on your screen. This monthly webinar series is brought to you by AAFMAA Mortgage Services, LLC. We are a wholly owned subsidiary of AAFMAA, offering a full spectrum of mortgage products to the military community. Currently, we conduct business in Alabama, Colorado, Connecticut, Delaware, Florida, Indiana, Iowa, Kansas, Kentucky, Maryland, North Carolina, Oklahoma, Oregon, Pennsylvania, Rhode Island, Tennessee, Colorado, and Virginia, and we will continue to open offices in states across the country. At AAFMAA Mortgage Services, we offer a variety of mortgage options, and our team of dedicated licensed mortgage professionals can help you determine if a VA loan, USDA, conventional mortgage, or construction loan is best for you. Plus, being part of a not-for-profit member-owned association enables us to offer low rates and low-cost mortgages to the military and veterans. Among all of our professionals, we have decades of both military and industry experience. We are an equal housing lender, and our NMLS is 1423968. As a wholly owned subsidiary of AAFMAA, we operate the same values and priorities of our parent company. AAFMAA stands for American Armed Forces Mutual Aid Association and is the longest-standing not-for-profit association that empowers military families with affordable financial solutions. We accomplish this by being the premier provider of financial planning, investment management, and trust services for the military, not for profit. This presentation is educational. It is for general information only and is not specific investment, legal, or tax advice for any of you individually. Do not rely on this presentation alone to guide your purchase decision. Since each individual situation is unique, the type of loan that benefits you the most will not necessarily be the same as another current or former service member. For individual advice, please contact us directly. We produce this webinar series in-house with our own professional staff as a service to our members to help them better understand the resources that are available to them. I will now go ahead and turn it over to Dale, who will begin the agenda.
Hello, my name is Dale Poe. I'll be glad to go over everything with everybody. Let's start off with the agenda. What we're going to cover is what is the VA funding fee, VA funding fee cost. We got a couple of fee charts here. We're going to go over a fee chart for the regular military, fee chart for the National Guard and Reserves, and a fee chart for cash out refinances. We'll go over exceptions and tax deductions. Generally, all veterans using the VA loan program benefit from paying a funding fee. The funding fee reduces the loan cost to taxpayers considering that a VA loan requires no down payment, has no monthly mortgage insurance. The VA funding fee keeps the VA loan program self-sustainable. All right, for example, if we have a veteran using it for the first time, buying a house for $200,000, a VA home, you would put zero down. The funding fee would be 2.15% or $4,300 total. The funding fee chart here for regular military. Zero down, first time use is going to be a 2.15%. And if you use it every time after that, it would be a 3.3% total. At the same loan amount, putting 5% to 10% down of the loan amount, the funding fee would be 1.5% for the first time use, and each use after that would be 1.5%, as long as you're putting 5 to 10% down for each use. If an individual is putting 10% down and more, the funding fee would be 1.25% and 1.25% for each use after that. Reserve National Guard personnel, 0% down, First time use, 2.4%. Each use after that, putting 0 down, would be 3.3% using it another time. Same individual, 5 to 10% down. The funding fee for reserves, National Guard personnel, 1.75%. In each use, as long as they put down 5 to 10%, would be 1.75%. 10% and up, putting down, would be a 1.5% funding fee, and 1.5 for each use after that, as long as they put in 10% down or more. On VA cash out and IRRRLs, the funding fee IRRRLs, the funding fee is 0.050, and each use after that is 5.0. That's for interest rate reduction loans. Manufactured home loans would be 1%, or 1% on each one, funding fee and additional use. And loan assumptions would be 0.5 and 0.5. The good part is for disabled veterans, and this is what this is going to kind of cover, a veteran receiving VA compensation for service-connected disability, the funding fee would be waived. So that whether it's the first time use, third time use, the funding fee would be 0. A veteran who's entitled to receive compensation for service-connected disability if you did not receive retirement of active duty connection, or surviving spouse, or a veteran who dies in service or from a service-connected disability. So all these instances here, the funding fee would be 0%. The funding fee is tax deductible. So, you can put it right into your 1098 mortgage insurance statement, list what it is, and that would be a tax deductible for you. Any questions from anybody at any time on funding fees or any other questions in general? I'd be glad to answer them. My name is Dale Poe. Our phone number here at the Virginia Beach office, 703-707-1035. My email address would be rpoe@aafmaa.com, and I welcome any questions or at any time.
Thank you so much, Dale. We actually had a few questions come in while you were giving your presentation, but to our listeners out there, please don't hesitate to continue typing your questions into the question block on your screen, and we'll get to them. So the first question we had come through was, who pays the VA loan funding fee?
All borrowers who are not declared exempt from paying the VA loan funding fee must pay it. The exception is for disability veterans who are disabled. They would not have to pay the funding fee at all.
Okay. Do I have to pay the VA loan funding fee in cash up front?
No, you do not, but you do have the option of paying it, like the 5% down, to lower the funding fee amount. You can roll the funding fee into the loan amount. So if the funding fee was $5,000, you can add it to the top end of the loan.
All right. If I am later determined to be exempt from the VA loan funding fee, do I get a refund?
The answer is yes, as long as the veteran has filed for disability, like before he or she does the loan. So let's say they file for disability and it takes them 3 years to finally get to be a disabled veteran, then that funding fee would be waived for them, and they would get it back.
Great. Those were some great questions you sent in. If we didn't fully answer your questions or you think of another question later, please reach out to us at mortgage@afma.com, or you can email Dale directly at rpoe@afma.com or by calling the work phone. This weekend, you'll receive a follow-up email with instructions on how to access a recording of this presentation, and you can always register for future webinars and review past webinars at afma.com/webinars. If you found this information useful, we encourage you to please share it with your friends and family. Our membership grows stronger every year because you introduce those in your military community to AAFMAA. Thank you again to everyone listening and for joining us today. We look forward to our next opportunity to assist you.